Good afternoon, everybody. Today I'm chatting with Chris Frostad from Purepoint Uranium. In this interview, we discuss how Purepoint got their property portfolio as a company that started out in 2004 and still exists today as an explorer in the Athabasca Basin. We also get into the importance of finding high-grade discoveries and what it's going to take in order to knock Purepoint as a stock out of its current range. Guys, I think that Chris has some really interesting insights because he has been working in uranium for 2 decades. All right, everybody, enjoy the interview. Chris, thanks so much for joining us today.
Happy to be here, Steve.
So Purepoint has been around for, I think when I was looking back, it was 2005 or 2006. You guys originally came into existence. And there's been a heck of a uranium boom that you guys experienced a couple of years in. And then quite the drought there, around a decade of nobody caring about uranium. And now we're kind of back. We've seen the spot price of uranium go from the 20s to hitting over $100. How challenging was it to stick it out throughout the 2010s?
Oh, a piece of cake, Steve. No, it was easy. Money coming in. It was actually, we were fortunate when we were one of the earlier ones back in 2004, 2005. So we were fortunate. We were able to acquire a lot of the property that we wanted to acquire. We spent a few years actually researching a lot of that area that nobody really cared in back at the day. It was I think the price of uranium was down around $8 or $9, so it was pretty quiet. And yeah, we worked our way through that boom. It happened over the course of a couple of years, and then things slid off again. But one of the things we did do is we earned in on a project held by Cameco and Orano, 2 projects actually, on the western side of the basin. And around the time when uranium started to go to favor, NextGen and Fission started to find all kinds of uranium out there, and it became a very important project for those 2 partners. So I would say that over the downtime, we were actually able to focus on that project out there. It was financially supported primarily by Cameco and Orano, and it allowed us to put a lot of our other projects on maintenance, if you will, for that period of time. And it kept us relevant, kept us busy. We're the operator on both of those projects, and things have been going very well. So when in the last few years, as things have lit up again, and the world's decided it wants to go nuclear, we're able to wheel those other projects out of the warehouse and get moving again. So it's been it was very helpful for us to have those partnerships.
So you've been in this for, like we said, for a long time here. You've seen some booms, some busts, and some booms again. Do you have any sense of really where uranium needs to sit at to be healthy long term, if let's just say that nuclear sentiment does continue to be as positive as it does, and we see a doubling of the number of nuclear power plants over the next 20 years? What price do you figure that uranium really has to kind of sit at in terms of like a price range in order for projects to actually get online and for enough capital to flow into the space for the developers and the explorers to actually get to the finish line of production and stay there?
Well, I think we're there now. I think the incentive price for uranium has always been felt to be somewhere between $70 and $90. That's really what was needed to get things moving along and open up these mines and get the old ones back pumping again. And that's kind of where we are. But I think it needs to be there for enough of a period of time that people feel comfortable then turning on a mine. I mean, even a mine that's on maintenance right now is going to take a year or 2 to turn back on, let alone the ones that are being developed. So as you're piling hundreds of millions, if not billions of dollars into getting a mine ready to go, and you're still looking at a year or 2 out before that thing's going to be up and going or longer, I think you've got to be pretty confident that the price is where it's going to be and is going to stay there before you start injecting that kind of cash. So I think right now as the long term, the publicly known long term is up around $75. I'm sure the contracts that are going on are higher than that, and the spot price seems to be leveling out at that mid to high $80 mark, I think that's where it needs to be. Whether it swings around a lot more in the meantime, it probably will, because it is a pretty tight market. I mean, we know this is a small market relative to other commodities, be it gold or coal or anything. Uranium's a pretty small market, so it flips around pretty heavily. But I mean, this is where we need to be.
So something I think quite a bit about lately when I'm just looking at uranium companies, and we're doing all of our homework, going name by name, reading the filings, and something that I think that the uranium investor community, which is a very engaged community, and it's kind of akin to what we experienced with cannabis stocks 5 years ago. There's a huge community of people who are really into uranium, but in my view, a lot of them overlook the tax environment in jurisdiction to jurisdiction. So some of these states or provinces, they charge a pretty big royalty off the top. Some of them don't. And I look at the number one performing uranium equities pretty much Encore Energy, and they've actually managed to get to production, and they're in a state that doesn't really have a whole lot of challenging tax laws. So when we talk about the Athabasca Basin, where there's as I understand it, a 5% top line royalty, which then you can deduct 75 basis points later down through the tax laws. So about 425 basis points. Do you think that it creates a place or a situation in the Athabasca Basin where the companies that really deserve the most merit with investors are the really high grade projects? Is high grade that important when we're talking about the Athabasca Basin?
It matters from a number of perspectives, and I'm not convinced that the tax aspect of it is it's not unimportant, but I don't think it's a real driver in terms of what motivates or move these things along. I mean, let's face it, a 5% shift in the price of the commodity has to be withstood by your project, otherwise you shouldn't be building it. When it comes to the grade, how it affects it is in other ways, such as the tailings and the environment, and the processing plant itself has to be attuned up specifically to deal with that high grade of ore. I mean, let's face it, if I am producing ore grade of 5%, then it's going to be, I need X amount of tailings, and I need to process X amount of ore. If I'm only doing 1%, that's 5 times as much tailings I'm creating, and I have to process 5 times as much ore to get the same amount of uranium. So it's more in terms of when you're developing a production facility and a processing facility and looking at the environmental aspects and getting tailings together, et cetera, you really are geared towards whatever specific ore grade you're dealing with, because the ore grades vary so much. I mean, NextGen's Arrow, I think it's about 4% ore grade, which is spectacular. But MacArthur Lake and Cigar are 20%. So it's completely different engineering effort, if you will, or chemistry effort. And I think that's probably the bigger issue. So when you do look at some of these deposits, whether they're being found, if they're 0.5%, which would be spectacular in the States, it's very difficult to bring that thing into production in Canada because it's too low a grade to process anywhere. That's just the physics of it all.
Okay, so let's talk about Purepoint. You guys have one major project, Hook Lake, that is you guys are sort of a junior partner in, that has some significant grades, 10.3% U3O8 over 10 meters. That's along with Cameco and Orano, who are both partners in that. And then you guys have 9 other projects, all in the Athabasca Basin, around give or take 200,000 hectares, 210,000 hectares in the Athabasca Basin. Lots of stuff happening here. High level, what's got you most excited about the work that you guys have going on right now?
Well, I think a lot of the excitement is coming from the fact that we're working all these other projects. As I mentioned, many of these we started drilling 10, 11, 12 years ago, and we're just now getting back to. And the focus appears, has always been on Hook Lake because that's where we've been doing our work during the downtime, and and of course we're neighbors with a lot of the major discoveries that have been made lately. But we've got, like you say, 9 other projects. We've got three others that we're going to be drilling this year. So we're back at Turner Lake, which is a project we've had for quite some time. It's 100% owned, and it sits adjacent to and on trend with IsoEnergy's Hurricane deposit, which is just off the claim line. And there's a deposit that's close to 50 million pounds at 45% ore grade. That's a project we're excited that we're going to be getting back to drill in the next month or two. Red Willow, which is a very large project just beside it as well, sits right at the edge of the basin on that mine trend that runs up there. And our historic drilling there has come up with significant mineralization right across that project so far. We've got a dozen drill targets or drill zones across that property, and we've only really tested 3 of them. So again, we'll be up there drilling this year as well. So it's for us, it's the excitement of now being able to work all of these projects, not just Hook Lake, because they all of these projects are there with some purpose, right? This isn't a real estate play anymore. We've been up there for a while. We've gotten rid of the stuff that we know that we don't care for. We've hung on to the stuff that we think is important. And in the coming year, we're going to be advancing all of those projects as quickly as we can.
So to sum it up, you guys are drilling at Hook Lake, Red Willow, and Turner Lake, and you guys are going to be doing some geophysics at Smart Lake, Russell South, and Tabernor. Is that right?
That's right. Smart Lake is the other joint venture we have with Cameco. We drilled it, one drill program out there about 12, 13 years ago, and then everything lit up over at Patterson next door, where NextGen and Fission were. We hit uranium on that first drill program, and we haven't drilled it since. So we're doing final geophysics on that this month coming up to get it prepared for a drill program as well. When we do that, it'll be driven by the budgets that come out of Cameco in the coming months. The other projects, like you said, Russell South, we just announced a geophysical program, and we're going to be doing another one this coming month. And that'll be it for that one. We're ready to drill Russell, and it sits in amongst a lot of the recent smoke we've seen in companies like Baseload and 92 Energy. We're right in that neighborhood. Tabernor again we'll be doing our 3rd geophysical survey on that because we keep staking more. We've identified pretty much a 50-kilometer length of target area that runs across what was originally 3 projects, but we've now joined them all up. And we'll be getting it ready for drilling. So it really is about getting as much drilling as we can on all of these projects, because that's the only way you find something.
So you guys have a pretty big land package. I've heard a lot of people tell me that finding a uranium deposit in the Athabasca Basin is a lot like trying to find a needle in a haystack. It's certainly challenging. Again, you guys have been doing this for almost 20 years now. How have technological advancements made it different in the way you guys approach exploration today versus, say, 15 years ago when you guys did some of the drilling at, say, Smart Lake, where you didn't really come up with anything? I'm sure that there's stuff you do differently today.
I think there's certainly some technological tools we now have that we didn't back then. But I think more than that there's an understanding of the basin and the geology and the deposition of uranium in that area that has changed drastically over the last 15 years or so. One is that typically no one thought that you could find uranium outside of the basin, edge of the basin. And that was pretty hard drilled into most people's psyche. And since then, we found that you can. I mean, Fission's triple R is outside of the basin because, in fact, the basin was bigger back in the day before glaciers scraped off a layer of it. The other thing is that 15 years ago, the going theory was that all of these deposits, everything that had been found, was sitting at the unconformity. And that is the Athabasca Basin is a big bowl in the Canadian Shield full of sandstone, and all these deposits were being found at the bottom of that bowl. Now we know that these deposits are now deeper than that. Most drill holes back then were going maybe 25, 50 meters below that unconformity. Now we're seeing in a lot of cases the uranium and mineralization refining doesn't even begin till around that point. So, NextGen's Arrow deposit, Cameco's Millennium, a lot of these are now deep in the basement rock, and that's now we're finding that we're going to have to start drilling a lot deeper than we were before. So those are two obvious ones that we come across. From a technological standpoint, now that we've done a lot of drilling, and we're able to mirror that or match that with a lot of the geophysics we're doing. We're finding what geophysics work in different areas of the basin that didn't, that don't work well in other parts of the basin. The east is certainly different from the west. There's a technology it's not new. It's recently been come up from Australia, called ANT, and it's essentially seismic that runs off of the vibrations of the earth as opposed to making explosions. And they're finding that is identifying some of the indicators a lot more clearly than other things that we've seen before. So there's a bit of a scramble to apply some of that to it. So there's lots of things you can do before you drill a hole in the ground, and should be doing before you drill a hole in the ground.
Now, I normally don't like to ask CEOs this question, but I think it's kind of valid here because, like I said, you guys we're chopping away in, let's say, 10 years ago, your share price was in a range similar to what it's in today.
Mm-hmm.
And we've seen the price of uranium fly up from the 20s to today. It's sitting in the 90s. And over the last year, you guys are kind of down a little bit based on our last numbers.
Mm-hmm.
If I'm a retail investor and I'm saying, okay, I want alpha, if I'm going to invest in uranium, I need to find equities that are going to perform. What's the argument you have for them of why Purepoint is a favorable risk reward for the retail investor?
Sure. I think what I'm seeing now is that what investors need to understand and appreciate is that there's a difference between the producers and the developers and the explorers in terms of the business they're in terms of the value proposition, in terms of what they're doing. And if you actually look back over the last year or two, you're going to see some interesting stuff if you start to group those together. For instance, as the price of uranium really started to take off about a year ago, the producers started to follow that trend upwards. But now where the price of uranium's gone up 100%, say in that period of time, the producers are up 50%, which ain't bad. The developers, though, if you look at them as a group, weren't reacting in the same way. They did start to rise, but in fact, the developers are on average sitting right now where they were 2 years ago. So the market hasn't really given them their due yet. Although I would say that companies like a NextGen or like a Denison who are actively driving a project towards production probably got a better lift than some others. But if you look at the explorers as a whole, the market's dealing with them very differently. And I think what you'll see is that over the last 2 years and even in the last 6 months, as uranium prices have gone up, as a whole, explorers have continued to drift down, more in line with the general commodity market than with the uranium markets. And that's really, I think people need to, and investors need to understand that differentiation and what that means going forward. So at some point in time, because as you know, we all know, there's a lot of money wants to get into this sector. It's a very active sector right now, and there's a lot of money wants to find its way into it, and there's not a lot of room for it. It's not a big sector. If you add up all of the market caps of all of the uranium companies, public uranium companies, you're going to come up with about $45 billion in total, which is the size of one big mining company. So it's not big. And 70% of that is Cameco and Kazatomprom. So as money keeps coming into this sector from investors, obviously it's going to the producers first. We're seeing that as it goes up. But when that delta, what can be attained, starts to fill up, you're going to see a lot of that investment coming downstream. And that's what a lot of the analysts are saying too as well. So you're going to see the developers get more active, and eventually you're going to see the explorers get more active. But if you look at our stock in particular, what you will see is that we are tracking the average almost to the bump as we go along. And from an exploration game, the only thing that's really going to differentiate you from that average is to make a discovery at the end of the day, right? Because we're all dealing in the real estate industry until then.
Yep. Okay, last question for you. If I'm an investor watching or potential investor and I want to evaluate management over the next year, what does 2024 look like? What's in terms of milestones, potential catalyst timelines, that sort of stuff? What are you looking out for in 2024?
Well, I think the fact that we're one of the last men standing kind of speaks to some aspect of acumen in terms of what we've been able to do here over the last 10, 15 years. I mean, we have been managing the company to the market and spending where it wants us to spend and not spending when it doesn't want us to. I think what you're going to see coming up over the next year, we have a lot more capital available to us than we did before, and that we think that in the coming year, we're going to see a lot more investment wanting to be made in the sector. We're going to do a lot more work this year. So we are, like I mentioned, we are just wrapping up our drilling at Hook Lake. We'll be putting out probably news releases starting now, once or twice a week moving forward, because we've got a lot of work lined up. So I mentioned it's going to be Hook Lake results coming out. We're going to be doing more geophysics at Russell. We're going to be doing geophysics at Smart. We're going to start drilling at Turner Lake. We're going to be doing more geophysics at Tabernor, and then we're going to be drilling at Red Willows. So there is going to be a lot of news flow coming up, particularly over this next 6 months, as we really dig into all of these projects and get the drills rolling.
Well, that's good to hear. A quote I heard from one investor in the Canadian junior markets is that we are in the entertainment business, and it's important that you do have constant news flow to entertain your shareholder base. So it's good. It's good to hear you guys have lots going on, and there'll be lots to watch over the remainder of the year.
That's the plan.
Chris, thanks for doing this. I appreciate you taking the time to answer our questions, and hopefully you'll hop back on in the future after you hit major discovery.
There you go. Thanks, Steve.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.